Bismillah Rahman Rahim. Assalamu alaikum. Welcome to another video. Today we'll try to discuss few terminologies which are normally used in different businesses, and as an ERP consultant or any system analyst, you will be using these terminologies in any business. No matter which ERP is there, maybe little company to company, sometimes terminologies are different, but those may be few, couple of them. So let's have a look on. I just selected 20 short names, so we will discuss those one by one. I just selected by my own that okay, these are frequently used, so at least as a beginners people should know it. Okay, our first one is API. Normally it is used in any ERP implementations or any system study or whatever. So, and this is IT terminology, application programming interface. So, this is normally interface or code is given in order to communicate to certain application. It can be through web service, or it can be in Oracle through PL SQL or something other way. So, normally the system developers or owners, they give sort of gateway, I will say gateway, that okay, if you want to do with our application or communicate with our application, then you can use this API. Okay, this is now let's say for example in this example this is for web front end, mobile application. So, there is a API REST service, this is Oracle service. So, it can be any other service as well. So, it is basically API, right, to communicate to anything over in your network. So, let us say for example, if you want to create invoices, so there will be an API to create invoices, because you don't need to know inside that application. So, they will tell you these are the standards, you have to pass these parameters or columns with your data. So, automatically the system will transfer to its own tables the way they are there in the application itself. Okay. B2B, this is another terminology used by the companies. So, B2B is a business which a company will do with another company, corporate to corporate. So, let us say for example, a car manufacturer is selling to their resellers. So, it is again one company to another company, still the end user is not there in between this transaction, right. Because let us say for example, if this is car manufacturing, he is selling to this one who is their reseller. So, this is another company. So, from him it will go to the consumer or end user, right, who will be the end buyer, right. So, B2B is business to business. In this, retail is not involved, it is business, commercial business. Okay, B2C, next one is B2C. Now, B2C will have different e-commerce and there are so many ways. So, normally when you are going to a retail store, so that is B2B, B2C transaction. So, that is business to a consumer, because you are end consumer, you are buying a shirt, you will use it. So, you are a consumer. So, it is a business to consumer. Okay, another terminology is BOM, BOM. It has its own dynamics as well, but I will just share higher level of this with an example. Let us say for example, if you go to any shop where there is a coffee machine. So, now if you see here, for coffee machine we have a BOM, bill of material. That is, let us say for example, to produce one unit, what material will be required, at what cost, right. So, here we have different products. Let us say first is milk, its unit of measure, means what is the unit of measure. Then we have let us say I put it coffee powder, milligram, water, sugar, cup. So, cup is unit of measure is each, let us say count 1, 2, 3, 4. So I just put it, these are just I will say dummy numbers, it's not actual. So don't relate with the actuals. It can be any currency. I just put it there for giving example. Okay, now if you have up to this on the left side, this one, this is your BOM. So this is for 1 unit. So let's say for example, to produce 1 cup of coffee or something else. I am giving you example of coffee because this is straightforward, everyone can see and experience it. Okay, to produce 1 cup of coffee, you need this material and this will be the cost. Now you have to produce 100 cups of coffee. So in your system, you will enter to execute this bill of material 100. So what it will do, it will multiply with the quantity and the cost will be multiplied by quantity as well, this cost. So it will give you how much material is required and how much will be the cost, total cost. So you will calculate this total cost, right? Now since here it's a small or lower unit of measure, here you might have different, let's say in liters or higher units. So but I am giving you just in the same pattern and not to confuse, right? Okay, now when you will find these number of quantities, then you can check your stock. Do you have this much stock available? If not, then you have to first procure that before execution the production of 100 cups of coffee. So you will arrange, let's say for example, you are out of water, there is no water. So you need to arrange water or it is less available, right? So now if you relate this coffee bill of material with the car, let me write it here, car manufacturer. So they will have different items or products which will be listed, and then you can multiply that bill of material with the units you want. Let's say for example, if you want 500 cars, it will give you the required material with the available material in the inventory. So then you can find, okay, do you want to procure, or it's not your decision, you want to go with it, or you might change this quantity. Let's say for example, it might take time to get those items. So you might say, okay, if it is available for 400, let us produce 400. I am just giving you an example. It's not maybe practically you will not be doing it. So this is how your bill of material works. Okay. Now another terminologies are O2C and P2P, very commonly used. So O2C is order to cash, right? So any ERP you will be using, it will have these two cycles. These are business cycles. So these will start with order to cash. Order to cash means you received order. So now here you are a supplier, right? In this case, here you are supplier. So where you have, if you are talking about Oracle, this will be your order management and this will be your payable, right? So if you see here down, there is a certain stages are given over here. You can go through this. So ideally you received an order from customer, you will process that order, you will issue from your stock or inventory, then you will ship, then the same will be invoiced in AR, accounts receivable, then you will receive the payment from your customer, right? So cash received. So that's why it is order to cash. So from order to, when cash is received and that invoice is matched or closed, means this cycle is completed. Now your next stage is to transfer data to GL and all those things. But ideally O2C transaction is up to this level, right? Okay, now next is P2B, procure to pay. Now here you are supplier, but here you are customer, your company is customer who is buying from a supplier or suppliers, right? Okay. If you see here P2P of Oracle, so you will have purchase requisition, request for quotation, supply. So this is procurement cycle. So procure to pay. So you will procure in purchasing PO module, and then you will pay in payables AP module, right? So this is ending with the receivable AR. Let me put it here, AR, and here it is AP, financial module. So further financial module, AP will further post to GL and all those things. But ideally the transaction with your supplier, it is up to AP. So once you will pay the cash, so that's why it is pay, procure to pay. You procured and you paid, transaction closed, right? I think this will be straightforward, and especially when you are going to any interview, such things can be asked. So you should be knowing it, even if you are not using these or you are doing something else. But as a business point of view, these terminology you should be aware of. Okay, another costing methods I will discuss. I will not go into costing details and all those things. What are the benefits? But normally in inventory costing methods, there are two methods, FIFO and LIFO. Very important methods or terminologies. Okay, if you see, I just put it up. I just took one picture over here. So here it is. From here you are going in. So if you see here, this is a queue, right? So who can go out first? Who went first? So this is called first in. So this trolley went first inside. So it will go first because this is a queue now. Just an example, right? Okay. Now if we take both together, FIFO and LIFO. So let's say, for example, we had like these items. So 1, 2, 3. So this was the input. So first in, this is first in, right? Then we took this one, then we took this one. So if we go to FIFO, first in was 1. So first out, then second, then third, right? But LIFO is opposite, right? 3 will be issued first, 2 will be second, and 1 at the end. Different companies or different accounting standards will allow these in different countries in a different way. Let's say in America, they are offered or they are allowed to do LIFO since they are using GAAP. But in other countries, they are using IFRS. So in that, FIFO is normally used. It will have costs. I mean, the old material might have lower cost, latest material will have higher cost. So these are different ways to handle it or understand it. I will not go into detail for that. It might need a separate full video on that for the costing point of view. But what I will do, let's say, for example, if you will go to a retail store and if you want to buy milk, let me give you an example of FIFO. So what they do, because milk will have expiry date, right? So if the latest material or latest stock they will sell first, then their old stock will be expired, right? So what they do, so now let's say, for example, this is their rack. So this is front side. So whenever new stock will come, they will push it on the back side, from the back side. So you will see the earlier expiry dates will be on the front, and the fresh material will be on the back. So you are selling from the front, then things are moving next, more stock will come again like this. So normally what people do, sometimes they when they buy, they want to buy, are interested in the latest or fresh material. So what they do, they will check one or two items from the front. Let's say for example, third item is more fresh, it will have manufacturing date recent than these one. So they will pick this one if they are smart. Otherwise, they have to buy the front one, right. So now you can experience when you will be going to on retail store, you will find these things where there are expiry dates. Okay, let's move to next slide. PO and PR, these are commonly used. PO stands for purchase order, and purchase requisition is for PR, right. So purchase order is a legal document normally issued to any supplier by the customer, that it will have the agreement, and it will have terms and conditions, how much quantity is required, rate is finalized, everything is finalized. So once a supplier will receive this purchase order or document, he will supply that material, right, according to those agreed terms. In the purchase requisition, it can be internal purchase requisition you are sending to store, or it can be external as well. So this is sort of someone, if any department need something, so they will issue a PR to the store department. If it is available, then they will issue it. Otherwise, they have to arrange. Let's say if you need stationery, so you will generate an PR to the store department. Okay, these are another accounting terms, financial terms I would say as well. So first is FY, stands for financial year, PTD stands for period to date, QTD stands for quarter to date, YTD stands for year to date. Okay, what I did, I created this small sort of presentation on using Excel. So if you see here on the top, I have months. I am assuming your financial year is from January to December. Financial year is when your whole year activity is monitored and reported. So your full year will be from January to December. It can be starting from June as well, depends on company to company, country to country, or nature of business as well. Okay, this I just put it 1, 2, 3, the number of months. Then I said, okay, this first 3 months, quarter 1, quarter 2, quarter 3, quarter 4. So each year will have 4 quarters, right. Okay, now if you see YTD, whenever you will run that report or balance or whatever, it will start from your 1st January or the first day of your financial year, right. So no matter where you are, when you will ask system to give you YTD balance, it must start from the first day of the year, financial year, right. So in this case, let's say for example, if I am in April and I am running YTD balance report, it should give me from 1st January. If I am running the same report in August, again it should start from 1st January till August. Now in August, like this here, right. Okay, this is YTD. I think it should be clear now. Same way QTD. QTD will give you balance from the first day of that quarter. So let's say for example, if you are running in, on March, so I am assuming your all data is posted till March. So it will give you from 1st January till March. But if you are running QTD in June, it will not go to the first quarter, it will give you from April, because second quarter is up from here, right. Now in third quarter, let's say for example, it is you are still in August. So if you are running in August, it will start from July 1st. So it will give you, because since only 2 months are there, so in this QTD you will get only 2 months data or 2 periods data, right. Here these are, because we we did on end of the quarter, so that's why it is full 3 months, but here it will be only 2 months. But let's say for example, if you are in September, then it will be 3 months, but if you will run end of October, then it will be only 1 month, because fourth quarter will be only October as of that date. Okay, PTD. PTD will give you balance period to date. That means if you are running on 31st of January, it will give you balance from 1st January till 31st of January, right? It will reside or will calculate of the same month starting from 1st of that month, right? It will not go to any other month. So, let us say for example, if you are running this report on 15 of February, so it will give you 15 days data starting from 1st February, right? I think now these terminology should be quite clear. Okay, another terminology in retail business is POS, point of sale, and you must be noticing it whenever you are going to any retail store. There is a computer in front of the salesman and he is punching the order, he is giving you receipt slip and you are paying, you are getting any change, and then you are getting the products as well, and that is it. So, if you will see the front side of that salesman, let us say he will be having such screen. So, this screen is called POS. This is sales screen, point of sale, from where you can sell. You can go to any garment store or something like that. Layout might be different, design might be different. Even if you are going to KFC or McDonald's, they will have certain things with different features or something like that, but this is POS, right. So, you should know what is POS. RFQ and RFP. Okay. Now, these are almost same terminologies, but used for different purposes. So, if we go to RFQ, request for quotation, what is RFQ? RFQ is when you are interested to buy something and you want to know the cost, right. So, here only cost is there. So, you will ask, okay, you will send to the supplier that, okay, I need this item, one quantity, give me the price, one quantity, give me the price, and so on. And you might send these to 10 suppliers. So, they will send you their quotations with their prices, which you can compare, and you can decide, okay, who is better, and you want to buy from home, and these things. Okay. Now, if you see RFP, RFP is on other side. Let us say for example, if you want to buy an ERP system, in that there will be start date of the project, they have to communicate their team, scope, you have to share the scope, when you need, how many months or years or whatever, which modules, what will be the process, then they will send you quotation, proposal, which it will have details of their companies, their background and all those things, right. So, this is related to, and it will have commercial as well, let us say cost as well, how much will be the cost and all those things, in detail. So, it will be a lengthy proposal which will carry all these information in detail in order to, because this is to get a solution, complete solution. Here you are just getting a product, right. So, this is the difference. SCM, supply chain management. So, if you see here, supply chain is having a lot of modules in which you will have inventory, transportation, procurement, order management, material handling and all those things. So, all these things will be coming under supply chain management. Manufacturing, if you don't have, you have to manufacture, you have to bring, you have to arrange, you have to ship, and shipment will be coming in, going out, all these things, transfers, return, sales, this is complete coming under SCM. GRN and RMA. goods receipt note. Whenever you receive any material from your supplier, you will enter in the system called or document called as GRN, right? How much quantity received, how much accepted, anything, whatever rejected, and Okay, RMA, return material authorization. So this material authorization is normally when you sold to your customer. This is in order management I am talking about as per Oracle. So when they will return you something that okay, this is not as per specification, or maybe they order something else, or it is damaged or whatever. So they will return you back. So you will have to enter an RMA, right? Okay, I think we covered a few important terminologies. Uh, I will be trying to bring more terminologies as well, and will share those in detail as well. So, if you have any feedback on these, please share, and uh, because sometimes feedback is important, how we are doing, right? And thank you very much for watching this video. Allah Hafiz.